Very good morning. In this session, we'll be covering concept with respect to credit notes. Now, in GST, let's take in normal sense, credit note is something when you raise in following cases. For example, you have sent a product, you have sold a product for rupees 100. Then you found out for any reason, for any specific reason, that out of 100 piece of product, 20 rupees of product is to be returned back. So in that case, what you will be doing? 100 rupees sales invoice are already built. So after 2-3 months, again you're getting the 20 rupees of worth of goods again back to your godown. In that case, you'll be issuing a credit note in this aspect. Now, this is just one reason. Now there could be multiple reasons why you're raising the credit notes. So in GST, broadly categorizing, section 34 covers the entire cases with respect to credit notes. And credit notes, if we just go with section number 34, subsection 1. Subsection 1 covers 5 cases, fine, in which it says that you can raise credit note for the following reasons. For example, first one, if there is any mistake in taxable values, GST rate, or goods are returned, or there are any deficiency in the goods or services. And the last, which was very recently added after Finance Bill, after Finance Act 2026 changes, that is, for any reason, post supply discounts, which has been raised under section 15, subsection 3B. Now, these are the 5 categories for which you can raise a credit note. Now, covering each one, for example, let's take the second category for just now, for just one quick example. In case example, you have sold one product or any service. Now, 100 rupees, you're charged at 18 percentage. 18 percentage, so you raised invoice of rupees 118 rupees. Now, post some time, you understood that the actual rate is 28 percentage. So, if we take 28 percentage, in that case, the value should have come to 128 rupees. So, for the differential amount, you'll be raising a credit note. Now, this being just one of the reasons, in GST, it allows you to raise credit note for 5 different reasons. First one being taxable value. You have a higher if you want to reduce the taxable value, or any changes in the rate, or goods are being returned, or there's a deficiency, or in case of 15.3 subsection B. We'll come back to 15.3 subsection B. Will 15.3 subsection B. For now, we understand that there are 5 good reasons. Now, there there is just one more condition which you have to fulfill. That is same section, subsection B, which tells that you have to raise the credit note within 30th November of the subsequent financial year, or actual date of filing GST annual return, whichever is earlier in this case. So total, in order for credit note, you just have to comply as of now with 2 conditions. First condition is section 34 subsection 1. Out of the 5 reasons, you can in for any reason you can raise a credit note. And the second condition, as per section 34 subsection 2, it states that the credit note should be raised within a time frame. The time frame is earlier of the following two. First one, 30th November of the subsequent financial year, or the actual date of filing and return. Now, moving further. Now we are come to the third condition. The third condition is given as a proviso. Proviso to section 34. subsection 2. It gives you with two conditions, A and B. First condition, it tells that recipient should reverse the ITC component. And the second condition, moving forward, these two conditions also to be satisfied. So summing up, section 34, subsection 1 tells that for 5 reasons you can raise a credit note. Subsection 2 tells that the credit note which you are raising, it should be raised within a time frame. Time frame whichever is lower of the following two. First one, 30th November 2000, 30th November of the subsequent financial year. And the second condition is, and the second time limit is actual date of filing and GST unwritten. It should be lower of the following. And there are two provisos which are also to be satisfied. First one, the recipient should reverse the ITC component, and the second one, the tax incidence should not be transferred to the recipient. Now, summing up, these are the very basic conditions. Now, along with this, you also have to read two more provisions. First one, 15.3 subsection B, and second one, Rule 53. Let us quickly move to Rule 53 as of now. Rule 53 is nothing more. It just tells that when you're raising a credit note, in that case, certain fields are to be mentioned. Certain fields are to be mentioned in the credit note. For example, in the credit note copy, there should be GST of the party, there should be name and address, there should be description, there should be quantity, there should be reason for it. Example, these sort of information should be filled. There should be amount, there should be GST value, there should be the total value, there should be signature. These are the specific fields or for which there should be a credit note. Now coming up to section 50 rule. Rule 53, it says that necessary fields in credit notes. Now we'll come back to this. Now we'll move further to one of the two components which might create a confusion. First one, before Finance Act 2026, in 15 subsection 3 subsection B, in this case there were two conditions which are to be satisfied in case if you want to reduce your value. In case as per value of supply provision, if you want to comply with value of supply provision, there should be two conditions. First thing, 15 subsection 3 subclause B says that for post supply discounts, you can raise a GST credit note if both the conditions are satisfied. It had two conditions, 1 and 2. First condition being there should be an agreement, plus there should be an plus there should be a specific linking of that credit note with an original tax invoice, one or multiple tax invoice. Second condition, recipient should reverse the ITC, fair and square. Now, this agreement plus specific linking, the one which I'm highlighting now, it created a lot of mess because it was very difficult because the agreement can be of two type. It can also, as per Indian Contract Act, it also allows you to have an verbal agreement. In those cases, it was very difficult to prove to the officer that it was already agreed, and for this purpose, we are raising this credit note, and we are raising a GST credit note in this case, not a financial credit note. Financial credit note is nothing but where GST component is not considered, where only normal taxable value is only provided. We don't they don't consider the GST effect. Now, post Finance Act 2026, this one particular condition has been removed. So if we if you take the revised after Finance Act, this is only one condition. That is same. Recipient should reverse the ITC part. Now considering this, the main intention was to remove the agreement component. But in the agreement component, if you just look carefully, there are two parts. One is agreement plus specific linking of the invoices. Now, once this condition is removed, many people are in the view that the specific linking provision is also being removed from the provisions. Now, coming back, as I told you, in rule 54, there is one clause, there is one sub rule which states that there should be a reference of original invoice details. So probably this is something where there's still some sort of confusion which is happening. So on a broader view, original invoice details is also required to be maintained, even though in GST portal you're not mandatorily required to provide those information in GST portal. But even then, you have to maintain some sort of record because Rule 53 clearly tells you that in the invoice physical copy or soft copy itself, there should be a column where it states that original invoice number reference should be provided over there in order for you to comply with the comply with the rule. Now, there's one more amendment which is also important in nature. I'll just quickly run through that amendment, or we'll do one thing. We'll probably run through that amendment. I'll just write here section 34 subsection 2 proviso amendment 25. There was one amendment which stated that earlier before 25 in the proviso there was just one condition. One condition was to be satisfied, that was very basic, that incidents incident of tax should not be transferred. Now after this there have been two conditions. One is incidence of tax, and the second one is recipient should reverse the ITC part. Now this one was now after I have given you the revised information in the above explanation, because while I was explaining you credit notes section 34 subsection 2 and the proviso with section 34 subsection 2, I have given you two conditions. The first one was recipient should reverse the ITC and the tax incident should not be transferred. Now here I can just write it over here stating that before 1/10/2025. Before 1/10/2025, only tax incidence was to be checked. Now it is something a team provision, even though there has been addition in the section, but in a way, pre-existingly, recipient reversing the ITC component was already given in section 15. So if it was not necessarily required to imply that even there should be a addition provision should be there, because it was already a condition as per section 15, subsection 3, subsection B. To raise a credit note, you need to satisfy with the following conditions. So even though this is a clarificatory in nature, so in the face of law, now in both the places there is a consistency stating that even there they are telling to recipient should reverse ITC. Even here, even in section 34 also, recipient should reverse their ITC component is being mentioned over here. Now we'll just quickly run through the provision part. We'll just come back from our notes and come to the actual component, considering the implication of GSTs. The CBSE will go run through CBSE provisions once. Coming to CBSE website, open this website. Come to GST. Once you come to GST, you will find Acts. Once you click Act, you will be revert back. Will be coming to this portal. In this GST, you have to select Act. In GST, you have to select Act, and first immediately come to section 34, which says that credit notes and debit notes. First condition tells you that for 5 reasons you can raise a credit note. I'll give you one by one where it is written just for quick reference. First condition is that the taxable value. Second one, tax charged. Third one, goods are supplied are returned. Fourth one, and supplied are found to be deficient. Fifth one, clause B, subsection 3, section 15. Now these are the 5 conditions for which you can raise a credit note. Now, second, coming to subsection 2, it states that it should be done within the specified time limit. That is 30th day of the November or the following the end of following the end of financial year. That is 30th November from the subsequent financial year, or the date of furnishing the relevant annual return, whichever is earlier. Now coming back to two provisos. First one, now there's a different sort of wording over here. It just says that in the reverse sentence they mention over here, no reduction in output tax liability of the supplier shall be permitted if ITC not reversed, tax incidence of tax passed on to any other person. So I have mentioned, if you want to comply with the condition, first thing, recipient should reverse, tax incidence should not be passed. They are just using different way of presentation. Now this is regarding section 34, very clean case. Now we'll just quickly go to rule 53. Okay, I think there's some error, so again we'll go to the process manually. In the meantime, we'll just come to section number 15. And also one more thing, in the proviso, if you will find that there's 1/6. That means you just have to come below and you will find that it was substituted, dated 1st October 2025 by Finance Act 2025. Because earlier there was this one condition, that is incidence of tax. Now there are two conditions. First one, ITC recipient. Second one, incidence of tax. Now we'll move to section number 15. Section number 15 is nothing more. There's just one condition that you immediately have to come to this part, which is a relevant part. Because we all know, like credit notes, if it is before or during the time of supply of the primary reason, in that case, there's no as such restriction. on reducing the value of supply. Now, why we raise credit notes? Because after raising an invoice, only after that time you found that there are these sort of deficiencies, like for 5 reasons after raising an invoice. So basically, post supply, you have identified these reasons and you are raising a credit note. Now, in that case, in case of post supply, in case of post supply, now there are let us come over here. It is yet to be amended as of now. Probably there should be some sort of, yes. It has been substituted, but it has not been notified as of now. So it is still pending notification. It is not yet notified yet. So we'll have to probably wait for some time. So till then we can just have an overall understanding. So probably it will be old condition, stating that after the supply has been affected, if you're finding for any reason you want to raise a credit note, you can raise, but you have to comply with only two conditions. First condition, ITC component should be reversed by the recipient, which was very same as section 34 subsection 2 proviso. Now, first condition, this one which I've highlighted as of now, it has been removed in Finance Act 2026, but it's still over here because it has not been, the effective date has not been notified in the Finance Act 2026. Once that is done, GST CBSE portal will also get updated. Now, if you come here, you will find that there should be an agreement plus there should be a specific linkage of related invoices. Now, this is with respect to section 15 subsection 3 clause B. Now, this provision has been eliminated as of now, but many are in the confusion that they are happy that agreement component now is not required because it's sort of benefit for them. They don't have to prove to the officer that where is the agreement, where is it stated. But there's one more thing, there's some confusion regarding this component, like specific linkage of relevant invoices. Many people believe that even this provision is also eliminated. But we come to Rule 53. If we come to Rule 53, we come to Rule 53, Subrule 1A. If we come to Subrule 1A, we come to clause number G. I think G. Yep. It says that serial number, dates of the corresponding tax invoices as the case may be. So here it clearly says that in a way, in the physical copy, because Rule 56 covers where a debit note and a credit note referred in section 34 shall contain the following particular, namely name, address, GST and nature of the document, serial number, credit note number, date of issue of document, address of the recipient, name and address in case of unregistered person, and most importantly, serial number of the corresponding tax invoice. So considering this, so even though the entire provision of this section 15 subsection 3 clause B, first condition is being removed, but still in law there is specifically mentioned that as in Rule 53, I'm coming back to Rule 53, it states that serial number of the original invoice number along with the date should be referred over here. Now, this is one thing with respect to credit notes. Probably, yes, I'll give you a broader coverage. So, you just have to refer three things. First one is section 15, subsection 3, clause B. Second one is section 34, subsection 1, subsection 2, and proviso to section subsection 2. Third one is Rule 54, 1A. Rule 54 subrule 1A states that what are the necessary fields that are to be available in a credit note. In a physical copy or a soft copy, there should be these fields are to be mandatorily be available in that. Now these conditions specified here. So in a way, you just do a combined reading of all the three provisions, you will get a better understanding. Yes, there are circulars and notification which clarify like different aspects, but considering the relevance on a broader scale, I'll just comply with the generic portion. So yes, there are specific circulars. So probably I'll make sure that I'll whatsoever you find a playlist, you will find a playlist setting the credit notes. and in that I'll be updating all the necessary circulars one by one. Since there was a generic discussion, I made a one single component over here. And yes, if any other specific circulars there are available, I'll pick up and I'll make a separate individual videos for that, so for ease of understanding. Sure. And thank you.